It's time now for the currency report. I want to take a look at the Canadian dollar. We've had some positive catalysts for our currency in the past couple of days. Starting with that point right there, the Bank of Canada coming with a rate announcement. Not that they shifted on rates, but sounding some pretty positive, optimistic notes, not only on the domestic economy, but the global economy as well. And today, sending one of their deputies out into the wild to give a speech and further double down on that optimism. So for more on the Canadian dollar's recent rise and what we could see from it going forward, we have Adam Button, Chief Currency Analyst at Forex Live, joining us. Good to see you, Adam.
Hi, Greg.
All right, so let's start with the Bank of Canada getting awfully sunny and optimistic about things, clearly showing up in the currency trade for the loonie.
Yeah, it is. And I like the word you used is optimism, because it's not necessarily grounded in everything that's out there. If we take a look at the big picture, and that's what the Canadian dollar is moving on, in the global economy, we had this worry about tariffs, and then you had some fear in markets, and then it sort of stabilized lately, and now the Bank of Canada is betting on an upturn into 2020. And, we're not there yet on the data. Manufacturing everywhere is still struggling. So, while I like the optimism, it's very typical of the Stephen Pawlow's Bank of Canada to feel a little better about things than they are. So it might be a little bit premature, but here's hoping to a better year next year.
All right, Adam, so a lot of our audience will be taking a look at that loonie graph thinking, oh, pushing towards 76 cents. Maybe it can go even a little higher because a lot of Canadians will head south. Are we going to get much more to the upside against the greenback? A little more bang for our buck?
Yeah, I mean, there is a lot that can go right for Canada. Like you were just talking about, housing has picked up. The consumer hasn't been particularly strong. Jobs have been strong. It's really that global growth leg. And, until we see real solid evidence of that, the ceiling is not too much higher above here. So really 1 or 2 cents is about the best that we could hope for in any sort of reasonable 2 or 3 month period.
Okay, 1 or 2 cents. Anyone going to Disney World will probably take it if they can get that upside. That's the Canadian dollar. Obviously, we got a lot of things going on around the planet. What do you want? You want to start with the British? You want to start with Brexit?
Well, let's talk about it. And it's interesting because what's happened is that we had this bleeding in the polls for the Conservatives. The worst case scenario was another hung parliament in the UK. And there was this sort of, they started about plus 15 points ahead in the polls. And it kind of slipped down to 10 and then 7. And right around 5 was where you'd get this hung parliament again. But those have kind of stabilized and popped a little bit. And the pound has popped with it. Now, if this were any other election, we'd be pricing this in already. But the UK has been unpredictable in terms of polls. So I think we have to wait until next week to see how it shakes out.
All right, the big show globally, obviously, is China and the United States. And anyone who watches us on a daily basis knows that we have to just flip the switch every day back to, uh-oh, somebody said something negative about the trade file. Somebody said something positive about the trade file. Pretty hard to get any clarity on that. How is it affecting the greenback?
Well, it's interesting because you're always looking for a little edge, right? Something that someone else didn't see. And one detail that we picked up on this week was a little blurb that said Jared Kushner had gotten involved in talks. Now, that's Trump's son-in-law. And normally that's just kind of a minor detail. But the Canadians, we remember back to NAFTA, and he came in right at the very end, really in the last week or less of talks, and helped to push it over the finish line. And he got a lot of credit. And he's kind of seen as a little bit of a Trump whisperer, as the guy who will draw a line somewhere. So I think there might be some room for real optimism there. But then again, we've all been playing this game for the better part of a year now, where it's kind of good news, bad news day. So you're reluctant, to put any more than a toe in the water until you get something concrete.
That's a very interesting little piece of intel, because just the other day I was having a discussion about the difference between what the political leadership will say during negotiations, and we saw it so many times during the NAFTA talks that the politicians would say one thing and maybe rattle our cages a little bit, but the people who are actually around the table would say, don't listen to that. Things are actually going pretty well. And that's what we're hearing from some reports, too, that the people who are actually at the table are saying, we think we're working towards a deal here.
Yeah, it's just about kind of drawing that line and saying, okay, let's get it over the line here. Again, it's early, but we have a real deadline here, and it seems to be in everybody's best interest to get it done. And I guess the other question is do we get a sell the fact kind of a trade at the end of the day? Because the hope for 2020 is that investment comes back, right? Corporations start to spend, people spend. But does a phase 1 deal really change that? Does it really remove any uncertainty and spark that? I'm pretty skeptical on that front.
Now, China is the other side of this equation. Obviously, there's been a toll exacted from them in this trade war. What are you looking for out of that economy?
Right. Well, if you were to build the pieces of the puzzle to a strong Canadian dollar next year, a strong economy, good risk sentiment, it would start with the phase one deal that has a little bit of teeth to it, and then be followed by Chinese stimulus. There has been some talk in the papers in China lately that they're preparing to cut rates early next year. That is generally how they signal it out of China. I think we need something pretty substantial to get growth from, up over 6% from probably looking around 5% right now. But if that were to come along, and then even maybe some European stimulus, that there's a lot of reason to be optimistic there. At the same time, is that investment spending going to come back with an American election out there? Does China really want to goose markets right now ahead of the election as well? Maybe that's a 2021 story instead of next year, and maybe we just muddle along, and that leaves the kind of Canadian dollar right where it is now.
Always great to get your thoughts, Adam. Thanks for joining us.
Thanks, Greg.
That was Adam Button, Chief Currency Analyst at Forex Live.